was started on September 15, 2008. The world awoke to a financial calamity. One of the nation's largest investment banks was collapsing, unable to meet its obligations. The Lehman Brothers bankruptcy, in turn, triggered the near destruction of the entire financial system and the worst recession since the Great Depression. Lehman Brothers Holding Incorporation was a global financial services firm founded in 1847. Lehman Brothers had humble beginnings as a dry goods store, but eventually branched off into commodities trading and brokerage services. Before filing for bankruptcy in 2008, Lehman was the fourth largest investment bank in the United States, behind Goldman Sachs, Morgan Stanley, and Merrill Lynch, with about 25,000 employees worldwide. It was doing business in investment banking, equity and fixed income sales, and trading, especially U.S. Treasury securities, research, investment management, private equity, and private banking. Lehman was operational for 158 years from its founding in 1847 until 2008.
How did corporate scandal occur in Lehman Brothers Holdings? By 2004, Lehman had acquired 5 mortgage lenders, including BNC Mortgage, a subprime lender. Lehman invested even more in securitized mortgage over the next few years, more so than any other firm. Lehman's big investment in mortgage securities made it especially vulnerable as the housing market started to crash. Lehman Brothers started to correct costs, but it was too late. It didn't have the capital cushion to absorb its loss, and its stock price continued to plunge. Lehman was forced to file for bankruptcy on September 15, 2008. The firm held more than 600 billion in assets, and it remains the largest bankruptcy in United States history.
March 2008, the arrival of Lehman Brothers and the second biggest underwriter of subprime loan, Boston, collapsed and was later sold to JP Morgan for as low as $2 per share.
On April 2008, Lehman Brothers took about 1.8 billion of assets onto its books after bailing out 5 short-term debt funds.
On June 2008, following the demise of Boston, Lehman Brothers started to look out someone to buy it, and on the same month, they are raising up almost $6 billion and reduced their exposure to real estate by 20% and said that it has lost almost $3 billion in the last 3 months.
August 2008, Lehman Brothers was actively looking for a potential buyer to save the company, and this includes Temasek, HSBC, Korean Development Bank, and several other Chinese banks. But all the discussion failed due to the company's going concern status. Following the downturn, Lehman Brothers share crashed by 50% while debt escalated by more than 60% due to previous defaults on Lehman.
On September 10, 2008, Lehman Brothers reported a loss of $3.9 billion and said that it may spin off to $30 billion of physical asset into a separate public entity and sell off $4 billion of real estate to BlackRock. Lehman Brothers share price nosedived to a 52-week dollar low of $6.93, while market capitalization reduced to $5 billion.
September 13, 2008, the U.S. federal official called an emergency meeting on the weekend with the expert to discuss any potential solution which can pull out Lehman Brothers from the crisis. The president of New York Federal Reserve were hurling bankers to broker for a last-minute deal. The CEOs of big investment banks were struggling with their own complication. They refused to take a piece of Lehman Brothers.
September 15, 2008, Wall Street began with the news of Lehman Brothers bankruptcy, and the key equity index immediately crashed 4%, the biggest single-day plunge since 9/11 attack.
Here are some of the people who were directly involved in this Lehman Brothers scandal.
Here are the former chairman and CEO of Lehman Brothers, Richard Fuel, and also Aaron Callan, who used to be the chief financial officer for Lehman Brothers and the one who misleading gimmicks to bolster Lehman balance sheet by almost $50 billion. And also Hank Paulson, US Treasury Secretary, the ones who deny Lehman bailout.
There are so many people who were affected by this scandal, and some of them are like the shareholders, the workers or their employees, and also other financial bankers.
So what lesson learned can we get from this Lehman Brothers scandal? The first one is financial stocks are cheap for a reason. Relative to earning asset and other major bank stocks are usually cheaper than the broad market. That should not come as a surprise. Every 10 years or so, financial companies get into some kind of mess. All that borrowed money eventually lead to trouble, regardless of what the regulators do to mitigate the risk of that happening. The last one is, don't expect to get the big picture right. In the moment before the Lehman disaster, only a handful of investing gurus were predicting the horror that was about to befall us, and many investors felt foolish that they had missed the warning sign. But many of those brilliant bears have stayed bearish, even as a forecast bull market has more than has made up for the losers of the worst bear market since the 1930s. It has been my experience that the bearish case regarding the stock market is almost always more convincing and intellectually more compelling than the bullish argument. But at least usually and ultimately the bull have been right, and I expect that to continue.